Hi everyone, welcome to Bulls and Bears. Here's your daily update on what's happening in the stock market news and updates. Let's check out what's moving the markets on April 30th, 2025. This video is only for education. We're not telling you to buy or sell any stocks. Please do your own research before investing. Woodside Energy, Australia's leading oil and gas company, has approved a $17.5 billion investment to develop a liquefied natural gas (LNG) facility in Calcasieu Parish, Louisiana. The project, formerly known as Driftwood LNG, was acquired from Tellurian for $1.2 billion and is now rebranded as Louisiana LNG. Construction is set to commence with an initial capacity of 16.5 million tons per annum, MTPA, with potential expansion to 27.6 MTPA. Production is expected to begin in 2029. The project is a joint venture with Stonepeak, contributing $5.7 billion, while Woodside covers the remaining $11.8 billion. Despite its economic prospects, the project faces criticism from environmental groups due to its projected 1.6 billion tons of greenhouse gas emissions over 40 years, equivalent to operating Australia's largest coal-fired power station for 120 years. The British pound surged to a three-year high against the US dollar, with the GBP-USD pair hitting $1.3440. This rise is fueled by a broadly weakening dollar and optimistic sentiment towards the UK economy. However, traders are cautious as a potential double-top pattern emerges near this level, signaling possible resistance. The market now turns its attention to upcoming U.S. economic indicators, including GDP growth, PCE inflation, and the non-farm payrolls report, which could significantly influence the dollar's strength and the future path of the GBP-USD exchange rate. BP said it would return less cash to shareholders as market uncertainty and weaker oil prices weighed on its outlook, while the British energy major's profit came in worse than expected. The London-based oil and gas giant said Tuesday that underlying replacement cost profit, a metric similar to net income its U.S. peers report, was $1.38 billion, compared with $1.53 billion analysts had expected, according to a company-compiled consensus. Its quarterly buyback fell to $750 million, from $1.75 billion in the prior quarter. Spotify's stock declined by 8% after releasing its Q1 2025 earnings. The company reported a 15% increase in revenue to €4.19 billion and a record operating profit of €509 million. Premium subscribers grew by 12% to 268 million, and monthly active users reached 678 million. However, the company's cautious outlook for Q2, including a forecast of 689 million monthly active users and revenue of €4.3 billion, fell slightly below analyst expectations. CEO Daniel Ek mentioned potential short-term noise ahead, leading to investor concerns despite the strong quarterly performance. Hims & Hers Health has announced a new partnership with pharmaceutical giant Novo Nordisk to offer the FDA-approved weight loss drug Wegovy through its telehealth platform. Starting this week, U.S. customers can access all dosage strengths of Wegovy bundled with a Hims & Hers membership, which includes round-the-clock care, clinical support, and nutrition guidance, all for a monthly fee of $599. This move represents a strategic shift for Hims & Hers, transitioning from selling compounded versions of semaglutide during previous shortages to now providing the branded medication directly. The partnership aims to make obesity care more accessible and affordable for self-pay patients. Following the announcement, Hims & Hers' stock surged over 27%, reflecting investor confidence in the company's expanded offerings in the weight loss treatment market. Mondelez International reported a slight uptick in first quarter 2025 sales, with net revenue reaching $9.31 billion, a 0.2% increase year over year. However, net income fell sharply to $402 million from $1.41 billion in the same period last year, primarily due to unprecedented cocoa cost inflation. The company's adjusted earnings per share stood at 74 cents, surpassing analyst expectations of 66 cents. Organic sales grew by 3.1%, driven by a 6.6% increase in prices, though this was partially offset by a 3.5% decline in sales volume. Despite these challenges, Mondelez reaffirmed its full-year guidance, anticipating approximately 5% organic net revenue growth and a 10% decline in adjusted EPS on a constant currency basis. CEO Dirk van de Put expressed confidence in the company's performance, citing strong pricing and market share gains as key factors supporting their outlook. Visa Inc. has reported impressive fiscal second quarter 2025 results, with revenue climbing 9% year-over-year to $9.59 billion, surpassing analyst forecasts. Adjusted earnings per share reached $2.76, exceeding the expected $2.68. The company witnessed an 8% increase in payments volume, a 13% rise in cross-border transactions, and a 9% growth in processed transactions, signaling strong consumer and business spending despite economic uncertainties. CEO Ryan McInerney emphasized the resilience of consumer spending across all segments. Additionally, Visa announced a substantial $30 billion share repurchase program, underscoring its confidence in sustained growth and shareholder value. UBS Group AG has reported a first-quarter net profit of $1.69 billion, exceeding analyst expectations but slightly down from the previous year's $1.755 billion. The Swiss banking giant warned of a particularly unpredictable economic path ahead, attributing concerns to escalating U.S. tariffs that threaten global growth and inflation. Despite these headwinds, UBS remains confident in meeting its targets, continuing its integration of Credit Suisse with $8.4 billion in cost savings achieved toward a $13 billion goal. The bank also reaffirmed its $3 billion share buyback program, signaling resilience amid market volatility. Amazon is under scrutiny after reports suggested the company planned to display tariff-related cost increases on its product listings, directly attributing them to President Trump's trade policies. The White House condemned this as a hostile and political act. Amazon responded, stating that the idea was only considered for its low-cost platform, Amazon Hall, and was never approved or implemented on any of its sites. This incident has reignited tensions between Amazon founder Jeff Bezos and President Trump, despite recent efforts to mend their relationship. Following the controversy, Amazon's stock experienced a 1.2% decline. In anticipation of Apple's upcoming earnings report, Morgan Stanley's Eric Woodring has raised the company's stock price target from $220 to $235, reaffirming an overweight rating. This move signals confidence in Apple's ability to perform amid global trade tensions and supply chain adjustments. Analysts project that Apple will report second-quarter revenue of approximately $94.45 billion and earnings per share of $1.62, marking growth from the previous year. Despite a 16% decline in stock value year-to-date, the consensus among analysts remains positive, reflecting trust in Apple's strategic maneuvers and market resilience. Investors are keenly awaiting the earnings report for further insights into Apple's financial health and future outlook. Domino's Pizza is experiencing a shift in consumer behavior, leading to a 0.5% decline in U.S. same-store sales for the first quarter of 2025. While overall revenue grew by 2.5%, many customers are choosing carry-out over delivery to avoid extra fees. In response, Domino's introduced a Parmesan stuffed crust pizza and offered a 50% discount on online orders. Additionally, the company announced a partnership with DoorDash, set to launch in May to broaden delivery options. Apple is preparing to announce its fiscal Q2 2025 earnings, with analysts projecting revenue of approximately $95.8 billion, a 5% increase year-over-year. This growth is partly attributed to a surge in iPhone purchases as consumers aim to avoid impending U.S. tariffs. To mitigate tariff impacts, Apple is accelerating the relocation of iPhone production from China to India. However, the company faces challenges, including delays in its AI initiative, Apple Intelligence, and a 9% decline in iPhone shipments in the Chinese market. Despite these hurdles, robust sales in iPads and services are expected to support overall revenue growth. Investors will be closely monitoring how Apple navigates these complex dynamics in its upcoming earnings report. Amazon is preparing to announce its Q1 2025 earnings, with analysts projecting revenues between $155.2 billion and $155.5 billion. This growth is partly driven by consumer demand influenced by tariff concerns and a weaker U.S. dollar. However, the company faces challenges, including potential impacts from U.S.-China trade tensions, softening ad revenue, and uncertain macroeconomic conditions. Amazon Web Services is proactively addressing customer concerns related to tariffs and data privacy. Looking ahead, Amazon plans to invest over $100 billion in capital expenditures in 2025, focusing on AI and cloud infrastructure to drive future growth. Despite these headwinds, most analysts remain optimistic, maintaining buy ratings with price targets ranging between $206 and $245, reflecting confidence in Amazon's resilience and strategic positioning in key growth areas. On April 30, 2025, Google CEO Sundar Pichai took the stand in a landmark antitrust trial in Washington, D.C. The U.S. Department of Justice aims to compel Google to divest its Chrome browser and implement measures to foster competition in the online search market. The DOJ contends that Google's dominance, bolstered by multi-billion-dollar agreements with companies like Apple, Samsung, AT&T, and Verizon to be the default search engine, suppresses competition and could extend into the burgeoning field of generative AI. Google argues that such actions would undermine user privacy, harm smaller companies like Mozilla, and penalize its innovation and investments. The trial's outcome holds the potential to significantly alter the structure of internet access and digital competition,